Hey everyone, welcome back. Today we're going to do a deep dive into Indian banking.
Sounds good.
We're looking at Bandhan Bank specifically,
Okay.
and we're going to be looking at their second quarter results for fiscal year 2025.
Right.
We've got their press release and investor presentation.
Lots of charts and data.
Yeah, they're packed with charts and data. So we're going to cut through all that financial jargon and try to figure out what's really interesting here, maybe uncover some surprises along the way.
You know, what's really interesting is Bandhan Bank is it's not your average financial institution.
Oh,
You know, they've got this incredible growth story. They went from a microfinance lender
wow.
to one of India's fastest growing private sector banks, but they haven't forgotten their roots.
Okay.
They're still deeply committed to serving the underbanked population. It's a fascinating blend of social mission and financial ambition.
Yeah, that's great to see, especially these days when, everyone seems to be all about the bottom line, right?
Sure.
So let's talk about that growth. The press release highlights a 30% jump in profit after tax, PAT, for those keeping score at home,
Right.
which means they pulled in about $114 million in profit this quarter.
Yeah.
And it's not just profit, their deposits grew by a really nice 27%, hitting $174 billion.
Wow.
That's impressive. That shows that people trust them.
It does. Those numbers are impressive.
Yeah.
What they tell us is that Bandhan Bank is attracting a lot of new customers and putting that money to work.
Yeah.
They also saw a 21% increase in advances, which is just a fancy word for loans.
Okay.
So think of it as they're lending out $159 billion this quarter to help fuel businesses and dreams.
Wow.
Yeah.
And that kind of growth suggests they're making smart lending decisions and generating strong returns.
Yeah, it seems like it.
So growth is great.
Right.
But we also want to know if the bank is on solid ground, right? That's where we look at asset quality, am I right?
That's right. You want to know the money they're lending is going to be paid back.
Exactly.
Yeah. Their gross non-performing assets, or GNPA, those are essentially loans that are in danger of not being repaid,
Okay.
have actually decreased significantly.
Oh, wow.
It went from 7.3% a year ago to 4.7% this quarter.
That's a good sign.
It's a very positive sign. It shows they're getting better at assessing risk and making sure their loans are sound.
So they're growing fast, attracting tons of customers, and doing a good job managing risk.
Yep.
Pretty impressive. But, you mentioned earlier they started as a microfinance institution.
Yeah.
Lending to small businesses and entrepreneurs who often didn't have access to traditional banks.
Right.
It's a very different world than lending to, big corporations.
That's a great point. And that part of their business is still very important to them. Their emerging entrepreneurs business, or EEB as they call it, is where they're carrying on that microfinance legacy,
Okay.
providing loans to those who might not have a traditional credit history.
And they're not shying away from showing us how that part of their business is doing. The investor presentation gets pretty detailed on their EEB portfolio.
And that's important
Yeah.
because microfinance comes with unique challenges. For example, they talk about their collection efficiency for EEB loans, which is basically how effectively they're collecting repayments.
Got it.
Yeah.
And it seems like they're facing some headwinds there. Their collection efficiency for EEB loans dipped slightly to 98.1% this quarter. So is that good or bad?
Well, it means that roughly 2 out of every 100 rupees that they lent out are facing some collection challenges.
I see.
It's not a huge drop, but it's something that they're definitely keeping an eye on.
Makes sense.
They're also doing a deep dive into what they call their EEB stress pool, which is just the fancy way of saying they're analyzing loans that might be showing signs of trouble.
So it's almost like they're doing a health check
Exactly.
on their microfinance portfolio.
Exactly. And the investor presentation also includes this fascinating vintage analysis of their EE loans. Basically, they're tracking how loans from different time periods are performing.
Okay.
It's a way to spot trends and identify potential risks, adjust their lending practices.
So it shows they're being very thorough in their risk assessment. They're not just throwing money at a problem, they're really trying to understand the nuances of the microfinance market.
Absolutely.
Which is a good sign, right?
It is. And then there's this other interesting development. The Reserve Bank of India, which is essentially India's central bank, decided to reclassify EEB loans as slightly riskier, which means that Bandhan Bank has to hold more capital in reserve to cover potential losses.
So that's why their capital adequacy ratio, or CRAR, which is, how much cushion they have to absorb losses, took a bit of a hit.
Exactly.
It went from 19.21% in September 2023 to 14.34% in September 2024.
Yeah.
Now, that's still well above the regulatory requirement of 11.5%, but it is a significant decrease.
It is. This move by the RBI is essentially forcing Bandhan Bank to be even more careful with their EEB lending. It's a trade-off. It makes them more stable, but it might also limit how well they can lend out, potentially impacting their profitability.
Okay, so we've explored this, fascinating world of microfinance. But Bandhan Bank isn't just about EEB loans anymore. They're actively diversifying their portfolio, venturing into things like housing finance, commercial banking, and offering a whole range of retail assets, like vehicle loans, personal loans, gold loans.
They're not putting all their eggs in one basket.
Yeah.
This diversification is a smart move. It helps them spread their risk and tap into new customer bases. It's all about creating a more balanced and resilient business model.
That's smart. And speaking of reaching new customers, they're also going all in on digital banking. They're seeing really impressive growth in digital transactions and customer engagement. For instance, they saw a 28% jump in digital registrations, and a whopping 96% of their retail transactions are now happening digitally. They're even getting creative with things like using UPI, which is, India's version of Venmo, to pay for GST, their goods and services tax.
It's not just about keeping up with the times.
Yeah.
It's about making banking more accessible and convenient for everyone. And let's not forget their physical presence. They've got a massive network of branches, banking units, and ATMs, covering 35 out of India's 36 states and union territories.
Wow.
They're reaching deep into both urban and rural areas.
That's remarkable. They're clearly committed to financial inclusion, and that extensive network plays a huge role in that. And they've got a solid team leading the charge.
They do.
The investor presentation even highlights the experience and expertise of their key executives, which gives you a sense of the brainpower behind the strategy.
It's like peeking behind the curtain
and
seeing the people that are driving this incredible growth story.
And they're not afraid to showcase their leadership team.
Nope.
Which bids trust and transparency. Speaking of transparency, I'm curious to see how they're balancing their microfinance heritage with their ambition to become a major player in, mainstream banking. It's a delicate balancing act.
It is a delicate balancing act.
Yeah.
For sure. So picking up where we left off, let's dig into the details of Bandhan Bank's loan portfolio.
Okay.
Remember we talked about their growth and advances?
Uh-huh.
Well, turns out that their retail loan book, excluding housing, grew by a whopping 92% year-on-year.
Wow, that's huge.
It is huge. It suggests they're successfully attracting a wider range of borrowers beyond their traditional microfinance base.
That's a great point. It shows they're not just sticking to what they know, they're branching out and competing in new markets, but that makes me wonder, what about their commitment to financial inclusion? Are they still focused on serving those who might not have access to traditional banks?
It's a valid question, and the data gives us some insight. The share of their loan book dedicated to their EEB and SBL,
SBL.
which stands for Small Business and Agri Loans,
Oh, okay.
has actually decreased slightly. It went from 49.7% in September 2023 to 45.4% in September 2024.
So it's a subtle shift,
It is.
but it shows they're trying to strike a balance
Yeah,
between serving their traditional customer base and expanding into new areas.
exactly.
So they're growing their overall loan book, but the proportion dedicated to microfinance is shrinking.
Uh-huh.
It makes sense from a business perspective,
Right.
but it also raises questions about their long-term commitment to their founding mission.
It's a tightrope walk, for sure.
Yeah.
On the one hand, they need to show investors that they can play in the big leagues and generate consistent returns. On the other hand, they don't want to lose sight of their social mission, which is what made them so unique in the first place.
It's a tough one for sure. Let's dive a little deeper into those EEB and SBAL portfolios. The investor presentation provides some granular data here. For example, they saw a decline in the number of active borrowers in this segment. It went from 122.5 million in Q2 FY24 to 85.7 million in Q2 FY25.
Wow.
That's a pretty noticeable drop.
Yeah, there could be several reasons for that. Maybe they're tightening their lending standards, becoming more selective about who they lend to, especially with the RBI's increased risk weight for these loans.
Right?
It could also be a sign of increased competition from other microfinance institutions or even fintech companies.
And it looks like their disbursement of EEB loans has also slowed down.
Uh-huh.
It was 169.3 billion in Q2 FY24, but dropped to 85.7 billion in Q2 FY25.
Again, this could be tied to the decline in active borrowers and a more cautious approach to lending. It'll be interesting to see how this plays out in the coming quarters.
And remember that RBI risk weight change we talked about?
Yeah.
It seems like that had a direct impact on their capital adequacy ratio. Their CRAR dropped from 19.21% in September 2023 to 14.34% in September 2024. That's still a comfortable buffer above the regulatory requirement, but a significant decrease nonetheless.
It underscores the impact of the RBI's decision by requiring Bandhan Bank to hold more capital in reserve. It limits their lending capacity, which could affect their profitability in the short term. However, it also strengthens their financial resilience, which is important for long-term stability.
Okay, so we've got a good sense of the dynamics within their EEB and SBL portfolios. Now, let's shift gears and look at some of their other business segments. Their housing finance portfolio, for instance, seems to be growing steadily.
Right, their housing finance segment is showing promising growth, but it's not exploding like some of their other areas. Their total housing assets grew by a respectable 31%, reaching 51.4 billion in September 2024. What's interesting is that they're primarily focused on individual home buyers, which aligns with their mission of serving those who might not have easy access to traditional mortgage lenders.
So it's like they're taking their expertise in microfinance and applying it to the housing market, helping people achieve their dreams of home ownership.
Exactly, and they're being strategic about it.
Okay.
They're concentrating their housing finance efforts in regions where they already have a strong presence, like eastern and northeastern India, for example. West Bengal alone accounts for 39% of their total loan book.
Makes sense to leverage their existing network and knowledge of the local markets, so they're diversifying their product offerings. But sticking to their geographical strengths, what about their commercial banking division?
Okay.
That's where they're lending to bigger businesses, right?
Exactly, and that segment is booming. Their commercial banking portfolio grew by a phenomenal 40%, reaching 322.2 billion in September 2024. They're clearly making a name for themselves in the corporate lending space.
That's some serious growth, but are they just chasing big numbers or are they lending responsibly?
From the looks of it, they're being pretty prudent. If you look at the credit ratings of their commercial banking loans, you'll see that most fall into the A and above category, which means they're considered lower risk.
So they're not just handing out loans to anyone.
Nope.
They're being selective and focusing on quality borrowers.
Absolutely.
So they're not sacrificing their risk management principles for the sake of growth. That's reassuring. Now, let's talk about their retail assets portfolio. This is where they're offering things like vehicle loans, personal loans, and gold loans. It's like they're building a financial supermarket for the average person.
And that supermarket is bustling. Their retail assets portfolio saw a surge in growth, jumping from 62.3 billion in June 2024 to 75.1 billion in September 2024. It seems like they're tapping into the aspirations of a growing middle class that needs financing for things like vehicles, home improvements, or even personal emergencies.
And they're not just focusing on big city dwellers. Their geographic breakdown shows that they're making these loans available in metro areas, urban centers, semi-urban towns, and even rural villages. It's truly nationwide.
It's a testament to their commitment to financial inclusion.
Yeah.
They're extending their services to customers across the spectrum, regardless of their location or background. It aligns with their origins as a microfinance institution focused on serving the underbanked.
So it's like they're bringing the same ethos of accessibility and empowerment to a wider range of financial products. They're not just offering loans, they're offering people a chance to improve their lives.
That's a great way to put it. They're empowering individuals and businesses to achieve their financial goals and contribute to economic growth.
Now, we've talked a lot about loans, but what about the other side of the equation? Their liabilities, which are primarily customer deposits, also tell an interesting story.
Absolutely. A bank's liability profile is crucial to understanding its overall financial health. And in Bandhan Bank's case, it's a very positive story. Their total deposits have grown significantly, reaching 1.43 lakh crore in September 2024. That's a 27.2% increase, which is actually higher than their loan growth rate.
Wow, that's a lot of people putting their trust in Bandhan Bank. What's driving that growth in deposits?
Well, for one, they're attracting a lot of new customers. Remember, we talked about how they added 700,000 new customers just this quarter, bringing their total customer base to over 35 million.
Yeah.
It's clear that their brand is resonating with a wide audience. Also, their SI ratio, which is The proportion of deposits that come from current and savings accounts has remained stable. These types of accounts are generally cheaper for the bank to maintain compared to term deposits, which tend to have higher interest rates.
So they're not relying too heavily on expensive term deposits to fund their lending activities,
Exactly.
which is good for their profitability.
Precisely, it indicates a healthy and diversified deposit base.
All right, so we've covered loans, deposits, and their commitment to serving a wide range of customers. Now, let's dive into something that's become increasingly important for banks in the digital age, their digital banking strategy.
This is where Bandhan Bank is really shining. They're investing heavily in technology and digital platforms to make banking more convenient, accessible, and personalized for their customers, and the results are impressive. They've seen a 28% growth in digital registrations, and a whopping 96% of their retail transactions are now happening digitally.
Those are some serious numbers. It seems like they're going all in on digital. They're not just offering the basic online banking and mobile apps, they're getting creative with things like UPI payments for GST.
They're definitely at the forefront of digital innovation in the Indian banking sector. It's not just about keeping up with the times. It's about using technology to improve efficiency, reduce costs, and reach new customers, especially in remote areas where physical branches might not be easily accessible.
And it looks like their digital efforts are paying off. They've seen significant growth in digital transaction volume and a surge in logins to their corporate internet banking platform.
It's a clear indication that their customers are embracing these digital channels. It validates their investments in technology and positions them as a forward-thinking financial institution.
Okay, so they're killing it in the digital space, but let's not forget about their physical presence, their network of branches, banking units, and ATMs.
That's another area where Bandhan Bank stands out. They have a vast network of nearly 6,300 outlets spanning 35 out of India's 36 states and union territories. What's remarkable is that they're not just concentrated in big cities. They're reaching deep into rural and semi-urban areas where access to financial services is often limited.
The investor presentation has this amazing map that really highlights the geographic spread of their branches and banking units. You can see how they're strategically positioned to serve a diverse population, including those in remote and underserved communities.
Their extensive reach is a key differentiator for them. It allows them to serve a vast and diverse customer base and stay true to their mission of financial inclusion.
And they're not just building branches, they're building a presence in local communities.
Right.
They have over 4,500 banking units, which are smaller, more localized outlets that offer a range of basic financial services.
These banking units are a crucial link between the bank and its customers in remote areas. They provide a touch point for financial literacy, access to credit, and a gateway to a wider range of financial products and services.
It's clear that they're not just building a bank, they're building a network of trust and empowerment.
That's a great way to put it. They're creating a financial ecosystem that benefits both the bank and the communities it serves.
And let's not forget about the people behind this incredible operation.
Yeah.
They have a strong leadership team with decades of experience in banking and finance and a dedicated workforce of nearly 80,000 employees. The investor presentation even goes the extra mile to include detailed profiles of their key executives.
That's a nice touch. It adds a human element to the story and shows they value transparency and their employees as they're saying, here are the people who are making this happen.
It definitely builds trust and gives you a sense of the talent and expertise that's driving their success. Okay, so we've covered a lot of ground here, from their loan portfolio to their digital strategy, their branch network, and their leadership team. But before we move on, I'm curious to hear your take on their overall financial performance. Are they just growing, or are they growing profitably?
That's the million-dollar question, isn't it? And the answer, thankfully, is that they're doing both. Looking at their key financial metrics, it's clear that Bandhan Bank is firing on all cylinders. Their net interest income, or NII, which is the difference between the interest they earn on loans and the interest they pay on deposits, grew by 20.7% year on year. Their operating profit is up by a solid 17.2%, and their profit after tax surged by nearly 30%.
Those are some impressive numbers.
They are.
They're not just growing, they're growing profitably, which is the ultimate goal for any business.
Absolutely. And it's not just about top-line growth. Their return on assets, or ROA, which measures how efficiently they're using their assets to generate profit, stands at a healthy 2.1% for the quarter. Their return on equity, or ROE, which measures how well they're using shareholder funds to generate profit, is at a strong 15.8%.
Those are both healthy figures for a bank of their size and growth trajectory.
They are.
It shows they're making smart decisions, managing risk effectively, and generating solid returns for their investors.
They're striking a balance between expansion and financial prudence, which is essential for sustainable success. It's not just about growing fast, it's about growing sustainably.
So they're hitting all the right notes financially, but what about the future? What are some of the key challenges and opportunities that lie ahead for Bandbank?
That's a great question. And as one we'll explore in more detail in part 3, we'll delve into the competitive landscape, the evolving regulatory environment, and the potential impact of technological disruption on the Indian banking sector.
It sounds like there's a lot to unpack, so stay tuned for part 3, where we'll wrap up our deep dive into Bandhan Bank and explore what the future holds for this fascinating financial institution. Okay, so we're back for the last part of our Bandhan Bank deep dive. We've covered their financials, their strategy, and their commitment to financial inclusion. But now I want to look ahead. What are the challenges and the opportunities they face as they continue to grow?
Well, one of the biggest challenges for any bank, especially one as ambitious as Bandhan Bank, is competition.
Oh, yeah, of course.
As they move, further into mainstream banking, they're going up against some really established players with deep pockets.
Yeah.
And extensive networks. Think about, the big national banks and even international banks that are entering the Indian market. It's a crowded space.
So they can't just rely on their reputation as a microfinance leader.
Right. They need to convince customers and investors that they can compete with the big boys.
So how do they do that?
Well, they need to build a strong brand that resonates with a wider audience. One that conveys trust, innovation, and a commitment to customer service.
Okay, so it's not just about offering the same products and services.
No, it's about creating a unique value proposition that sets them apart.
That makes sense. And it's not just competition from other banks, is it? I mean, the financial landscape is changing rapidly with the rise of fintech companies.
That's right. These are tech-savvy startups that are offering innovative financial products and services, often at lower costs.
So that's a challenge for them.
It is a key challenge.
Yeah.
Bandhan Bank needs to embrace technology and find ways to partner with or even acquire fintech companies to stay ahead of the curve.
So it's a balancing act.
Yeah.
They need to leverage their existing strengths while also adapting to these changing dynamics of the market.
Absolutely. And let's not forget about the regulatory landscape.
Right, the RBI.
Yes, the RBI plays a huge role in shaping the banking sector in India.
And their decision.
Exactly. The RBI's recent decision to increase the risk weight for those EEB loans.
Right, is a prime example of how regulatory changes can impact Bandhan Bank's strategy and profitability.
For sure.
They need to be agile and responsive to these changes and ensure they're always in compliance.
So it's like they're navigating a complex maze with constantly shifting walls.
Yeah.
They need to be nimble and strategic to stay ahead of the game.
For sure. But amidst all these challenges, there are also some exciting opportunities.
Okay, let's talk about that.
One of the biggest opportunities for Bandhan Bank, and perhaps their greatest strength, is their deep understanding of the unbanked and underbanked population in India. There's still a huge segment of the population that lacks access to basic financial services, and Bandhan Bank is perfectly positioned to serve them.
They can leverage their microfinance heritage.
Yes.
And that extensive network to reach those who have been traditionally excluded from the formal financial system.
Exactly. They've built trust and relationships in communities that other banks might not even understand.
This gives them a significant advantage, especially as the government is pushing for greater financial inclusion nationwide.
And as we discussed earlier, digital banking is another massive opportunity. As internet and smartphone penetration increases in India, more and more people are looking for convenient and accessible ways to manage their finances.
And Bandhan Bank is already ahead of the curve.
Yeah, seems like it.
They're investing heavily in digital platforms and services, and they're seeing that impressive growth in digital transactions. They have the potential to become a leader in the digital banking space, not just in India, but potentially even beyond.
And let's not forget about their potential for geographic expansion. Within India, while they have a strong presence in the east and northeast, there are still vast regions where they have room to grow.
Absolutely. They could leverage their existing infrastructure and expertise to expand their network, open new branches and banking units, and reach even more customers.
So it's a strategy that aligns with their mission of financial inclusion.
It does. By expanding their footprint, they can bring banking services to underserved communities and help drive economic growth in those regions.
So they have the potential to become a truly national and perhaps even international banking powerhouse.
They do, but it won't be easy.
No, I'm sure it won't.
They'll need to navigate that complex and evolving landscape,
Yeah.
make smart strategic decisions and stay true to their core values. But if they can do that, the sky's the limit.
Well, it's been fascinating to do this deep dive into Bandhan Bank's story. They've come a long way from their humble beginnings as a microfinance institution, and they're now on a trajectory to become a major force in the Indian banking sector and beyond.
It's a testament to their vision, their resilience, and their unwavering commitment to financial inclusion. They're proving that it's possible to achieve both financial success and social impact, and their journey is an inspiration to us all.
And that brings us to the end of our deep dive. We hope you found it informative and insightful. If you want to learn more about Bantan Bank and their incredible journey, be sure to check out the links to the original source materials in the show notes. We'll be back soon with another deep dive into a new and fascinating topic. Until then, keep learning, keep exploring, and keep diving deep.